Dear traders, this is Trading Up here. We will basically be assessing an example based on the order block or supply demand strategy. And that is what we're going to be doing today. So as you can see here, I've got 6 main points. And these points are basically going to be deciphering how you guys should look at the market and how you should start your day of analysis. So without wasting any time, let's get right straight into it. We first got the mark high and the low. This will allow us to see where our break of structure is and allow us to identify the market structure. So let's do that. So we see the market has been going up and down basically, and I'm going to give you guys an example. I'll just mark a previous high and low that happened. So there. And then I'll mark this one here. Okay. So if you look at the high and low that I just marked, you'll see that the break of structure was to the downside. If that happens, we should then look for a sell opportunity. If it breaks to the upside, we should look for a buy opportunity. So now, second point says mark supply and demand or order block. And that's what we'll do. So we see this was the last order before price broke structure, and we'll mark that. Okay, it doesn't have to be perfect. We've marked it, so now we know a range in which or / area we're playing around. Third one is we scale in on the lower time frame. This means that we go into the lower time frame so that we are able to see what is happening on the lower time frame and look for patterns that we can use, which is number 4. So we're going to go to the 15 minutes. And we're going to be basically looking for a lower time frame snipe pattern within the higher time frame. So as you can see, we marked our order block around this area. The market got here, did not form any pattern. And the pattern we're looking here is whether we are looking for either like a trend line break of structure and a retracement, or we're looking for a 1, 2, 3 pattern, which is a high, low, and break of structure of the low to the downside, or a break of structure to the upside, retracement, and you take an entry of that order block. So basically here you're looking for any type of either a retail sell pattern or order block ICT sell pattern. So here we could have entered here, waited for this trend line to break and then entered there. That's one entry idea. Our second, well, first let's get our, So we are at 4 now. We're looking for the lower time frame pattern. Now at 5, we're going to enter at the lower time frame pattern. So this one was the first pattern that we saw. That's the first one, and we can put a 1 right here. But then let's say we don't see that for some reason and we will look at other patterns. So let's go. Here we see quite a nice pattern. We see that if we mark a high here, or a high and a low, we will see that the price broke to the downside. What do? We'll mark the order block. And the order block with broke structure here, which would be this order block. And then we could take our second entry of that order block. This is more like one I would take. Then what you do is you take a short position here. Stop loss above the order block. Aim 1:3, 1:5, 1:10. And as you can see, you would have won this trade comfortably. So in order to end this video off, all you want to do is you want to mark your high and your low. Then you want to look for the break of structure. If price breaks to the downside, look for sell. If price breaks to the upside, look for buy. Then what you do is you take the 4-hour order block, or whatever high time frame order block it is, and you scale in. Always want to remember it like this. If you find a daily order block, you scale in the 1 hour, 4-hour order block scale on the 15 minute, 1 hour order block scale in the 5 minute. Then you look for the lower time frame patterns. This can be a retail pattern, or it can be a high, low, and break of structure to the downside pattern. Once you've done that now, you'll enter at the lower time frame pattern, and then your aim 1:3, 1:12, or 1:10. Remember, stop loss should be above the high. Aim for 1:3, 1:5, 1:10. Thank you very much for your time, guys. I hope that video was very useful.